Welcome back to the garage, everybody. It's Monday night, the charts are glowing, the engines are warm, and yes, it's me, Avatar John, the man behind the wheel and your guide through the madness of another crypto market recap. Strap in. We've got a big one tonight. Here are tonight's top headlines. Titles only, no stories, because we like to keep you hanging. Bitcoin snaps back after the weekend bloodbath. Fed drops a new hint, and the markets blast off. AI titans make surprise power moves as the war heats up. Solana volume surges with bulls waking up fast. ETF flows flip green with quiet accumulation under the surface. Meme coin chaos returns as trenches start rumbling again. A brand new Layer 1 launch sparks 1000x chatter. Wall Street strategists admit they have no idea what's happening anymore. But let's be honest, we all know why you're really here. You didn't show up for titles. You came for the money picks. You came for the heat. You came for the action. And yes, we've got them. Triple X has been deep in the trenches all day, crawling through the mud, dodging the bots, and stepping over more failed launches than we can count. He climbed back up the ladder 30 minutes ago and said one thing: it's been a great day in the gutter. So do your part. Smash that like, hit follow, share this with your fellow degens, or that one friend still rocking his chill guy shirt who keeps saying he's holding, but hasn't checked a chart since 2022. All right, Garage Gang, Chapter 2, the market snapshot. Let's open this thing up and lay the parts on the table. Today was one of those days where the market walked in like it forgot what happened last week. Bitcoin came out swinging, sitting confidently in the high 80,000 range, like it didn't just survive a $2 billion liquidation dunk tank. It's like watching a fighter wipe blood off his mouth and say, "That all you got?" Ethereum is over here pacing back and forth around that 3,000 mark. You ever see a mechanic tap a gauge over and over like it's almost there but won't quite commit? That's ETH, flirting with the number, whispering to it, but refusing to punch through. And Solana, oh Solana. 1 minute it's in a ditch, the next it's back in the fast lane pretending nothing happened, holding that 130 area like a cow pretending it didn't escape the ranch earlier today. It's stable, but you keep side-eyeing it. Now, the equity markets, completely different story. We got the classic everything rally today. The big index up about 1.5%, tech blasting nearly 3%, AI stocks doing donuts in the parking lot. It's like someone snuck into the Fed and hit the good vibe switch. Crypto's total market cap pushed back toward that magical 3 trillion number. That's like the lights flickering back on at the garage after a blackout. Everything glowing green at once. Feels good, feels dangerous, feels like opportunity. And yes, the reason's pretty clear. Waller came out and basically whispered, maybe we should cut rates in December, and the entire market reacted like they just got invited to prom by their crush. But here's the real punchline. Atlas calls this whole setup a reflation rally riding straight into a holiday liquidity trap. Has like taking a joyride right before a rainstorm. Good weather now, slippery roads later. Enjoy the sunshine, but keep your hands on the wheel. That's the setup. That's the battlefield. Now let's move on. Tonight's news cycle was like watching 5 different shows at once, and every one of them thought they were the main character. Headline number 1. Waller from the Fed comes out and basically says, hey, maybe a December rate cut isn't the craziest thing in the world. Markets heard that and instantly hit the nitrous. Stocks, crypto, your cousin's meme portfolio, everything lit up like a Christmas tree. One little sentence from the Fed and the whole market acts brand new. Headline number 2. Bitcoin shook off last week's beating like it just walked out of a boxing ring, still smiling. We're talking $2 billion in liquidations, gone, and Bitcoin climbs back into the high 80,000s like it's late for work. It's giving heavyweight energy again. Headline number 3. Monad goes live and suddenly every influencer with a keyboard is yelling next 1000x. You ever notice how every time a new Layer 1 launches, everyone thinks they've discovered the next internet? Clark's got the receipts. Big VC backing, Coinbase hype. But tokenomics? Let's just say we'll keep them in the waiting room. Headline number 4. The AI titans are back at it. Google, Tesla, Broadcom, all ripping today. They got sold off hard last week. But today, they marched right back up the stairs like nothing happened. The AI trade is that friend who refuses to take a hint and just keeps winning arguments. And headline number 5. Spark of hope from ETF land. Spot Bitcoin ETFs flicked green across the board today. Not a flood, not a tsunami, but a pulse. And in this market, sometimes a pulse is all you need. Clark's official note for the night: narratives are shifting fast, but direction matters more than volume. The man loves his metaphors. Now that the news tower has spoken, let's shift gears. Because headlines tell you what happened, the garage tells you what matters. We are rolling down from the command deck with that 20,000-foot view, like he's staring at the whole world through a sniper scope. When Atlas talks, you don't sip your coffee. You hold on to it. He's calling the current setup a reflationary risk-on momentum window. Sounds fancy, but here's what it really means. The market's acting like it wants to party again, but the bouncer is watching the door. We've got about 72 hours of green runway, not a full trend, not a new cycle, just a window, a pocket, a moment. And moments can vanish. First pillar, rates. After Waller's little microphone moment, the odds of a December rate cut jumped up into that 70 to 80% pocket. You could practically hear Wall Street unzip their emotional jackets and exhale. The 10-year yield backed off the danger zone like a wild animal deciding, okay, maybe I won't bite today. That gave tech stocks room to breathe and gave Bitcoin permission to stand up straight again. Second pillar, liquidity. And this one is sneaky. Money is still draining out of the reverse repo facility, which Atlas calls synthetic QE light. That's basically cash dripping back into the system. Add China injecting into the yuan, Japan refusing to let their yields blow up, and suddenly the global plumbing doesn't look as clogged as it did a week ago. Third pillar, the dollar and volatility. The dollar index stalled, didn't break higher, didn't collapse, just chilled. Meanwhile, bond volatility is still elevated. Picture equities trying to sunbathe on the beach while bonds are over in the corner screaming into a pillow. Mixed signals everywhere. So what's Atlas's verdict? Simple. We've got a tactical bullish window heading straight into the turkey trap. That's his term for the Thanksgiving week liquidity cliff. Traders vanish, books go thin, algos start hunting stocks like sharks. You can make big money or get evaporated in seconds. So yeah, the next few days look playable, but your hands better stay on the wheel because the weather doesn't stay clear forever. All right, macro handled. Let's see what the on-chain librarian dug up in the data vault. Let's lift the floor panels and see what the chain itself is telling us. Because price lies, headlines lie, sentiment lies, but on-chain never does. The first thing that jumps right off the console is the leverage flush. And when I say flush, I mean someone pulled the handle and sent the entire casino down the drain. Open interest on Bitcoin is down roughly 35% from the October peak. That's not a dip. That's a full system reset. We're now back at levels we haven't seen since spring, which means the tourists, the gamblers, and the late-night leverage junkies all got washed out. Funding, which spent the entire downturn screaming in pain, has reset back to neutral. Not greedy, not scared, not overextended, just balanced. It's like everyone was forced to step outside, take a breather, and start fresh. That's rare, and honestly, it's healthy. Then we look at spot versus perps. And today, spot was king again. Real buyers, real coins moving. When spot volume takes the lead, that's the difference between a sugar high and an actual meal. And today was a meal. Next up, the big wallets. Whales stepped in around that 80 to 85,000 zone. Quiet accumulation while everyone else panicked. And exchange reserves keep trending down. Supply keeps shrinking, demand keeps creeping. And that silent supply shock clock keeps ticking a little louder each week. Over on the alt side, Ethereum is still dragging its feet. It wants to break that 3,000 ceiling, but ETF outflows and technical resistance are making it act like a car stuck between gears. Meanwhile, Solana held its 120 to 130 support like a champ, but the chart is still breathing heavy from last week's chaos. One slip, and it's back to the low hundreds. So what's the verdict from the data? It's not a blow off top. It's not a final cycle peak. This move looks exactly like what you see after the market purges the weak hands, resets the leverage, and gives the strong hands room to operate. In other words, the engine's cleared, the gauges look stable, and the car is ready for a real run if the driver doesn't panic. And listen carefully, because this is the one that actually matters for the next 5 years. Crypto runs hot, crypto runs cold. But AI is the arms race. AI is the Cold War. AI is the new oil, the new electricity, and the new battlefield all rolled into one. And today, the giants did not whisper. They roared. Let's start with Meta. These guys launched a test called Project Luna, and it's basically your feed, but weaponized. This thing reads your life before you even open your eyes. It scans every friend, every group, every page, every trend, and gives you a personalized morning briefing like you're getting intel from a government agency. That's not a feature. That's a lifestyle override. If people won't scroll, Meta will scroll for them. And if Meta can control what you see in the morning, they control the whole day. That's not tech. That's psychology. Google said, hold my smoothie, and took it further. They injected their Nano Banana Pro model straight into Google Workspace. And I mean beep. Slides, videos, Notebook LM. One click turns your PowerPoint into something you'd pay an agency $3,000 to design. Videos get auto thumbnails. Research notes become diagrams. This model writes, draws, redesigns, and frames your content with the confidence of a designer who thinks he's cooler than you. And he probably is. This is Google shifting from productivity tools to an AI-first reality. You don't just use Workspace now, Workspace thinks for you. Then we get the plot twist. OpenAI is feeling pressure, real pressure. Their CEO sent out a memo basically saying, hey team, Google is sprinting faster than expected. Brace for rough vibes. When the biggest AI company in the world tells its staff to emotionally buckle up, that means the race is tighter than anyone imagined. But here's the kicker. He also hinted at a new model in the works, something with deeper reasoning, longer memory, and more autonomous behavior. That's not a new version. That's a new species. Meanwhile, Edison dropped a nuclear-grade sleeper hit, an AI research agent living inside Jupyter notebooks. You tell it what you want, code, analysis, modeling, charts, and it builds the entire workflow for you. No errors, no Stack Overflow, no crying at 2 a.m. wondering why your for loop hates you. This isn't a tool. This is a lab assistant that works like a machine, thinks like a scientist, and doesn't microwave its lunch next to the chemicals. And over in the smart home battleground, Amazon rolled out Alexa Plus to Canada. Smarter conversations, personalized routines, contextual memory. This thing starts to understand how you live and adjusts itself. It's becoming less of an assistant and more of a roommate who judges your thermostat choices in 2 languages. So what does all of this tell us? It tells us the AI war isn't coming. It's happening right now. Behind the scenes, in boardrooms, in labs, in code. Meta, Google, Amazon, OpenAI, they're not competing. They're arming up. And here's the part the normies miss. Every time these companies push forward, it pushes the whole digital asset space with them. The rails, the tokens, the infrastructure, the narratives, it all blends. We're watching the foundations of the next economy being poured in real time. Crypto is the engine. AI is the fuel injection. And the people who understand both, they're the ones setting the future's price tags. And that is why we pay attention. Let's hit the sector scan. Because while the headlines scream one thing and macro whispers another, the sectors themselves tell you what's actually winning out there. And I'll say it right now. This is not alt season. Don't let the green candles fool you. This is a leaders-only environment. The strong are getting stronger. The weak are getting thrown overboard like a bag of bricks. First lane, artificial intelligence tokens. They're outrunning Ethereum on a 30-day basis like a tuned-up street racer blowing past a minivan. The entire DFAI category is heating up, and you can feel it. People don't want maybe someday tokens right now. They want tokens tied directly into the AI surge that big tech is feeding every single day. Next lane, gaming. And gaming is moving, but let's keep it real. It's moving with macro beta. When the big index pumps, gaming pumps. When the big index bleeds, gaming bleeds. The sector is alive, not leading. That's important. Now, the Blue Flame Special, Solana. Say what you want. Last week was ugly, dramatic, chaotic, but Solana is holding its levels like it's got something to prove. 120 to 130 has been the battleground, and the bulls defended it like it was the last slice of pizza at a LAN party. Volume climbing, builders shipping, narratives stacking, and rumors about new rails and ETF momentum don't hurt either. But let's not pretend everything is sunshine. Some sectors are still asleep. Old school DeFi, barely moving. High FTVs with no purpose, ghost towns. Tokens that pumped off hype alone, the air is gone. And the meme trenches, they're alive, but selective. It's not a free-for-all, it's Darwinism. The rotation right now is simple. AI over everything. Gaming over dead DeFi. Solana over ghost chains. And quality over chaos. The money is making choices again, not bets. And in crypto, that's always a sign the tide is shifting. All right, Garage Gang. Chapter 8. And tonight's Trench Report is a full-blown movie. Not a short film, not a trailer, a feature. Let me set the scene for you. He's not at home. He's not in the office. He's at the Desert Diamond Casino out in Arizona. That glorious place where the carpet has seen more broken dreams than a liquidation chart. The air smells like ambition and despair mixed together. And every slot machine stares at you like it knows exactly how many losses you've taken this cycle. He sits down at a little table in the corner where the lights flicker like a Solana RPC node during peak hours. 2 screens fire up, Axiom on the left, Bullex on the right. And before a single chart loads, before a single candle forms, he does the most dangerous thing a man can do in a casino. He loads 50 Sol into his Axiom wallet. Just like that. No warm-up. No second guessing. 50 Sol dropped into the digital trenches like a soldier stepping off the helicopter. He takes a sip of a casino coffee that tastes like someone boiled anxiety in a saucepan, cracks his shoulders, and begins. The Axiom feed starts spitting out contracts like a slot machine on malfunction mode. BullX trending heats up like a neon sign about to burst. He dodges rugs. He sidesteps bot traps. He marches right through low liquidity kill zones like he has plot armor. Hours go by. Time doesn't exist here. Only charts. Then it happens. He finds the rhythm. He starts playing. First play, a razor-thin scalp on Ecliptic, the wild child of the night. 1,000% up on the day. $985,000 market cap. 105,000 in liquidity. Over 2.8 million in volume. Dangerous, electric, unstable. He sizes tiny, rides a fast candle, grabs 4 Sol in under a minute, and ejects before the bots remember he was there. Next move, Pippin, a real survivor. 60 million market cap, 4.5 million in liquidity, and the big one, $46 million in daily volume. A chart cleaner than a dealership showroom window. He enters on a pullback and rides the reclaim like a man born for this moment. 9 SOL profit. Smooth, controlled, surgical. Then he sees the monster. Fartcoin, 279 million market cap, 10.6 million liquidity, 500,000 holders. A perfect 1 out of 100 rug check score. A meme that refuses to die and actually built an ecosystem out of spite. He sizes with confidence, catches the breakout, rides it like a cowboy riding a tornado. 14 SOL added to the stack. No hesitation, no nerves, no drama, just precision. Last little play, a fresh chart he snites on momentum reversal. In and out, barely leaves a footprint. 3 more SOL. Then he checks the wallet. 50 SOL in, 80 SOL out. He stands up, pushes the cursed casino coffee away, looks around at the flashing lights, the confused tourists, the 3 a.m. gamblers, and walks out of Desert Diamond like he just pulled off a heist. So what were the plays? Simple. Fartcoin, a mid-cap monster with 10 million in liquidity and a chart that deserved respect. Pippin, a veteran with real volume, real structure, and real staying power. Ecliptic, a baby cap rocket made for fast scalps, not long-term love. Monad-chan, rejected. Weak liquidity. Momentum dead. Not tonight. These weren't random choices. These weren't guesses. The market caps made the call. The liquidity confirmed it. The charts sealed it. And the message he sent on the way out of the casino, loaded 50, walked with 80. The desert was awake tonight, boys. All right, Garage Gang. Let's slow it down for a second and step into Lulu's world, the chart room. And if you're new here, yes, Lulu is the head of technical analysis in this garage. And yes, she is a pig for hoofs, a tail, 100% accuracy, and 0 apologies. Let's get into what she saw today. First thing, Lulu ran Bitcoin across 3 time frames, the 1 minute, the 15 minute, and the 1 hour. That gives us the pulse, the heartbeat, and the whole body. And she kept it real simple. Here's what she wants the garage to pay attention to. On the 1 minute chart, Bitcoin was making clean little higher lows all morning. If Bitcoin breaks above 87,950 on the 1 minute, we go straight into 88,200. But if we break down and lose 87,450, the floor disappears and we slide right back to 87 flat. Fast. On the 15-minute, this is the real intraday engine. Bitcoin has to hold that 87,600 region. If it does, it targets 88,400 and then 88,750. But if it loses 87,150, that door opens right into 86,500. And that's a drop you'll feel. Now the 1 hour. This is where the big decisions happen. If Bitcoin reclaims and holds 88,300 on the 1 hour, the road opens back up to 89,000 and even 90,000. But if we lose 87,000 on the 1 hour, we slide into 86,200. And if the market gets moody, we might see 85,500 blink. Now let's talk trades Lulu made today. 2 clean wins, nothing fancy. Early this morning, she caught the 1 minute higher low break at 87,250 and rode it straight up into 87,620. Pure micro precision. Then later in the afternoon, she nailed that 15-minute trigger line bounce, 87,420 into 87,980. Smooth, clean, textbook Lulu. So here's the quick Lulu map. Above 88,300 on the hour, we're heading to 89 and then 90. Lose 87 on the hour, we're visiting 86,200. Above 87,950 on the 1 minute, 88,200 is next. Lose 87,450, back to 87 flat. Hold 87,600 on the 15-minute, 88,400 is the next stop. Lose 87,150, down to 86,500. And look, none of this is financial advice. The head of TA in this garage is a pig. A very talented pig, but still a pig. And if you're taking chart advice from someone with 4 hoofs and a tail, that's on you. So smash that like, hit follow, share this with your degens. We're building this one warrior at a time. Let it